Hello and welcome to the Profit Partner, where we help you grow six-figure businesses in 12 months or less. My name is Cherie Warwick and I'm the Profit Partner. And I'm very excited today because I have the pleasure of introducing to you Bob Yeomans of RP Investments. Bob Yeomans is going to share with us today about real estate investing. What is real estate investing, how we can get involved with it, and some of the tips and traps that we want to avoid when doing real estate investments. Welcome, Bob.
Thank you, Cherie.
Tell us a little bit about yourself and your history with real estate investing. How'd you get involved with it?
Actually, I started investing back in Canada at the time, back in the mid-80s. Owned a couple of rental homes through townhouses and things like that, rented those out. Then we created syndication and we bought some land. From that land we put up a little mini mall, and then it sort of blossomed from there. And at the time I was in a 9-to-5 job, and the job took over until probably the early 2000s, when I could see a decline in the telecommunications market and I wanted to do something different. So I wanted to bring my experience back into real estate, especially the investment side. However, I became a realtor, doing real residential properties in both Virginia and Maryland. And it sort of grew from there that I did the residential side on my real estate side, and got involved with commercial buildings, especially apartment buildings that are 100 units plus. And so on the investment side, that's what we concentrate on. That's what I call our niche in the market.
Okay. So tell us a little bit more about, first of all, I have to comment on your accent because everyone is wondering where this wonderful accent is coming from. Where are you from?
Originally from England.
Okay.
But we actually emigrated to Canada back in 1978.
Wow.
And people always comment that, Bob, you're Irish, you know, top of the morning to you and the rest of the day to you. But in fact, it's from England, and people get confused because I say my R's. And the reason for that was that when we emigrated to Canada, my daughter was 1 year old at the time. And she'll hate me for telling you this story.
But go ahead.
Her name was Claire, and all the neighborhood kids used to come around and say, "What's your name? What's your name?" And she would say, "Claire." And the neighborhood kids would say, "What? What?" And eventually she went for speech therapy, and the therapist came to us and said, "Bob, it's no good me teaching Claire how to talk properly. If at the supper table you're going to say, 'Claire, come for supper.'" So I learned to say my R's. And there's an old saying in England actually about the T's and the R's. Don't say butter, say butter.
Butter.
It sounds better.
So tell us a little bit more about real estate investing. You know, we see the infomercials. We see you can make $1 million from this one transaction with the guy sitting on his boat.
Right.
How does it really work?
Those infomercials don't really work. Buying and selling real estate is not a get-rich-quick scheme. You know, you have to build it up. When I actually started in the real estate investment side, especially on commercial properties, I had a partner. And we went on for probably about 2.5 years, and my partner wanted out. He wanted me to buy him out because he couldn't see an end to it where we were going to make our profits. And I persuaded him to stay in. 6 months later, the market boomed. And off it went, and we started making positive cash flow, and the equity in our building started going up.
And that's
and then
very
he
important.
called me, and then he called me and he said, "Bob, do you realize how much taxes I'm having to pay this year?" And I said, "Yes, but look at what you've got in your bank account." And you know, it sort of blossoms. It takes time to build your portfolio, to build your equity, but it sort of takes off after a while.
And it's very interesting you mentioned the downturn is that, as a real estate investor, if you're going to actually have money in a building, you have to be able to forecast not having that cash flow for a while until the market does
That's right.
does increase. So you don't want to put your mortgage money or your rent money or
No, I mean, I would never advise anybody to take out a second mortgage or whatever on their house to put into a real estate investment, especially if they don't know the current market conditions. Each real estate market, it's just like night turns into day, day turns into night, and the oceans have their high and low tides. Real estate also has its own cycle and phases. And if you know how this cycle works, then you're at an advantage to a lot of the other investors out there. Think about, especially in the DC area, think about all the investors that bought in around 2002, 2003. A lot of those went into foreclosure. And yet, if you could determine that you were at the top of the cycle at that point and it was going to head downhill, then you wouldn't have bought.
Right, right. So tell us a little bit more about the real estate cycles. What are they?
Okay. You can think of a real estate cycle just like a roller coaster. It has its downs and it has its ups. And when the sort of cycle turns and it starts going up, it really means that jobs are coming into the area, people are coming into the area, and they need somewhere to live. And that's why RP Investments, basically what we have is a database of investors out there, accredited investors, and we find apartment buildings in these emerging markets when they're starting to go up. We look at a lot of the factors out there in that particular city or the county. When we find somewhere, I will go there. I will do research in that particular town or city, and if I find, yes, this is an emerging market, prices are going to escalate over the next 3 to 5 years, I will find a team down there. I will have what I call a virtual team.
Okay.
I find commercial real estate agents, residential real estate agents, appraisers, home inspectors, engineers, and things like that.
Okay.
And we build that team there, we build that relationship, and then we go out looking at properties.
Okay. So let me stop you because you mentioned accredited investor. Tell the public what that means.
Okay, an accredited investor, because we're a business, the Securities and Exchange Commission, the SEC, has certain limitations as to what we can do in going out there. And I believe they're doing a good job.
Okay.
Because any investor that comes into RP Investments, I like to sit down with them first. I need to know what their goals are, what their objectives, what are they looking for in real estate investments. And then I can define which database I put them into. Whether we go after what we call repositioning, that means we buy an apartment building, we modernize it, do paint jobs, new carpet, etc., bring in the tenants, and then sell it after about a year or so. Not so much positive cash flow, but higher equity. There's others where we're looking at the positive cash flow every month, and then the high equity at the end. Not as much as if you're doing it on a repositioning, but just the same.
Right. So an accredited investor...
An accredited investor, yes. The SEC has defined an accredited investor is that somebody who has earned over the last 2 years $200,000 per year in income.
Okay.
Or that investor plus their spouse combined brings in a salary of at least $300,000 per year.
Okay.
Or and this is where the other one is, that you have net equity, including your principal residence, of at least $1 million.
Okay.
What they're saying is that accredited investors know more about investing than just the person from the street. And you know, yes, you can lose money on this, but because of all the due diligence that we do, all the work that's done beforehand, there's a low risk, but there is still a risk.
Okay. Okay. And even though someone makes $200,000 or $300,000, they still need to be educated on
That's
real
right.
estate.
Yes.
Yeah. So tell us a little bit more about emerging markets. How many emerging markets are in the country currently?
Probably at any given time in the U.S., you've got between 20 and 30 emerging markets.
20 and 30. Oh,
Right.
20 to 30. Okay. And tell us a little bit more about what you look for when you're actually doing your research.
There are probably about 7 different indicators that we look at. And an example of this would be, let's say, the jobs coming into the area.
Okay.
You know, a company wants to relocate into an area. That way, we know that the news comes out. Company A wants to bring in 2,000 jobs, Company B wants to bring in 3,000 jobs, but they've got to find the building first.
Right.
If there's a building there for them, it can take them 2 years to relocate. If the building is not there, it can take 5 years.
Okay.
So whenever some company defines, yes, they're going to bring jobs into an area, we always look at what buildings are available, offices specifically, in that area for them to move into.
Okay.
If there are some, we know the population is going to increase in 2
Very
years'
swiftly.
time.
Yeah.
Now, usually for each person that a company brings in, there's between 2 and 3 other service people that are also required in that area.
Okay.
You know, you've got barbers, beauty salons, groceries, and things like that. So even bringing 5,000 people in, you're really looking about maybe 15 to 20,000.
Great. So really cities are like competing for these companies to come in and
That's
set
right.
up shop in their,
You know, and they're giving tax
their
incentives to them.
yes, yes.
And that's what we look at. You know, we'll talk to the economic development committees in the different cities, find out what have they done in the last year to bring jobs into the area.
Okay.
Has that strategy worked? If it hasn't worked, okay, we'll put them on the back burner for the moment. But if it has worked, then what are their expectations in the next 12 months?
Okay.
And then we'll build up from there. And that's a viable place that we will start looking at, and looking at the other 6 indicators in the area.
Okay. Give us another example of something that you look at.
Probably rental rates. Because we're always looking for apartment buildings. People want to rent, especially coming into the area. The first thing they want to do is rent for at least a year. They don't want to buy a house. They want to get to know the neighborhoods and things like that, so they'll rent, and that's why we're in this business.
Right.
If rental rates are rising, it means that A, the jobs are coming into the area, B, the salaries are there to accommodate the increased rents. Now, increased rents in apartment buildings is a good thing, because residential properties, you find the value of a residential property by doing a CMA, a comparable market analysis. You compare it with other houses of the same type in the neighborhood or community. Commercial buildings are valued differently. They're valued on the income, the net operating income that you bring in on a yearly basis.
Okay.
So if your income is, let's say, $60,000 per month,
Okay.
you can, 12, 6, 7, 720, I'm just working out, 720,000 per year.
Right.
right? Multiply that by 10, the approximate value of that building is 7.2 million.
Right.
Let's say you increase the rents on 100 units by just $10 a month. That's 120. That's 12,000 a month, 120,000 a year. 120,000 times 10
Is 1.2 million.
is 1. You've just added $1.2 million onto the value of that building.
So that explains why you're looking for rising rental rates. Is
That's
because
right,
you're
yes.
able to buy low and it increases the
Right.
value. Very interesting. So tell us a little bit more, maybe about a success story that you've had in regards to your company.
Okay. Actually, we were looking a little while ago at the Raleigh-Durham area,
Okay.
specifically.
I know that was very hot like a couple of years ago,
Yes.
right?
Yes. And we bought an apartment building down there. At that time, we weren't actually quite looking for 100 units plus. This was a 32-unit apartment building. And we bought it, and then we always look at what value add we can put into that building. There was some spare space next to the building that we rented out to a cellular telephone company.
Okay.
So they could put up their satellites,
Right.
or their local, whatever they're called.
Yeah, like the utility pole
No,
thing.
the towers.
Okay.
Okay. And the rentals on those are about $10,000 a month.
Okay.
So
phone
that was
company.
another $120,000 a year that we gained in revenue for our investors. We had some spare space down there, so we thought, okay, maybe we could put in a video arcade or a laundry room, or what we actually eventually went for was a gym training center type thing, where we put in weights and things like that. Everybody loved that, and that increase we could add to the rent based on that.
Right.
Video arcades, we always find that there's always damage, there's always problems coming up. You know, this video doesn't work, that one doesn't work, so it's a constant headache, basically. Laundry rooms, we actually went in and to all those units, and we put in washers and dryers in every unit. And by having that as well, and people didn't have to go to the local laundromat, they could do their own laundry in-house, and they just loved it.
Yeah, because
And that's what we're looking for, is if we can keep our tenants happy, you know, we'll have a pizza party every 3 months or so.
right, and keeping them in the units longer, because if you don't have the turnover, then that increases your revenue.
That's right.
Right, that's just like any business.
Right.
You want to keep the
Yes.
clients as long as
And
possible.
even, Sherry, even if some of the tenants do leave because they may relocate to somewhere else, you've now got somebody in your apartment building that'll go to their friends down the road and say, this is a great apartment building, why
Right.
don't you come and live here?
Right, right. So it's really about building community, and it's very important to people to
That's
feel
right,
like they
yes.
have some community, you know, whether you're single or married with
Right.
kids.
Well, I'll tell you, there was another one once that actually we were looking at, but we didn't sort of go ahead with it. We wanted to buy some small units in a particular development. Modernize these, completely modernize them, and then have our own HOA.
Okay.
And other people would want to join the HOA, but they couldn't do it unless their buildings came up to a certain standard.
Okay.
That was one of the ideas that we came about on this. We would actually offer some of the units to the local police department because they're not paid as much.
Right. And it helps too.
That's right, yes.
Yeah. So One thing with the Profit Partners, we help people to grow six-figure businesses. Let's say that a person is not accredited, but they still want to become involved with RP investments. Is there a way for them to do that?
Yes, there is.
Okay.
Actually, as I said, we've got databases of different investors out there. Those accredited investors, we are looking for the 100-unit plus. Now and again, we'll come across a property that's only maybe 30 units. We don't need as much investor money to get into this deal as the larger units. Because on the larger units, with the accredited investors, we're looking at $100,000 minimum. With the lower units, we don't need as much money to get in there, and we can still get in there with those investors. So maybe even if they've got 10, 15, 20,000, they can still get in, and we lump all the money together, the investors together.
Right.
Now the other thing that we do is that every 6 weeks we have a teleconference call with the investors in a particular unit.
Okay.
And we go through, tell them exactly what's happened in the last 6 weeks. You know, maybe we need some landscaping done. Maybe we need a new roof. We'll go through all those items. We'll let them know how much income we're getting in on a monthly basis. The income checks for the positive cash flow, they're mailed out to our investors every 3 months. But every 6 weeks, as I say, we have this teleconference call. And we do that with the smaller units as well, but we limit that to probably once every 2 months.
Okay. And I like the concept of that because I know personally, I like to know what's going on. Even if you say, you know, we just need some landscaping done, it kind of keeps me in the know. And I imagine
right, yes.
your other investors are the same way. Like, okay, this is chugging along versus you getting that surprise.
Right. Because I know one of the packages that we put together when we actually go after a building, we go into the databases, we call the people that in this particular database that are interested in this type of property. We'll call them and say, are you interested? Yes, you are. We send them a portfolio package of that apartment building, the demographics in that area, why we think this is a good deal, and all the numbers.
Okay.
So that they can review that, and then during that 6-week call, every time afterwards, we go back to that and say, well, you know, we promised you 18% cash on cash return. We're actually running about 18.3 or 19%.
Right. And again, it's just that check.
That's right.
The check, yes.
And my philosophy is that to promise my investors something and to exceed that promise. So that there's a better return from them down the road.
Now, is 18% pretty standard? You mentioned 18%. Is that pretty standard?
Usually it's cash on cash return. You're probably looking 15 to 20%.
Okay.
Sometimes we'll go up to 25% if it's a really good property.
Well, it's better than a CD.
Right.
Much, much better. But it's also, is it illiquid, meaning, you know, once I'm in for like 10 years? Or?
No, actually, we always, it is a requirement, again, with the Securities and Exchange Commission. If an investor wants out at any time, we will buy them out.
Okay. Okay. And because you have a database, you probably have someone that
yes,
want to.
We're always looking for investors to add to those databases and build up our portfolios that way as well.
Okay. Now, in our pre-interview, you talked about goals, and you sit down with the investor one-on-one and you discuss goals, whether they want equity or cash flow. I'd like to, you know, one of our final questions here, ask you about that. Tell the audience what you mean by that and how you help people map that out.
Okay, what we usually do is we'll sit down one-to-one like we're doing here, and I find out what your expectations are. You know, are you looking for a quicker return than usual? And to do that on, let's say, 100-unit apartment buildings, we do what we call a repositioning deal.
Okay.
That means that it's usually a Class A property. That means something in the high end.
Like
in
a
this
luxury?
area, you're probably looking at McLean or something like that.
Yeah, like luxury.
Yes.
Okay.
That needs some work doing to it. It's had some deferred maintenance, and we will go in and we will either relocate the tenants to another unit there while we're modernizing their current unit, and then we move them back again. And then we keep doing that. And once we've done that, we'll turn around and we'll sell it.
Okay.
During that initial term, you're probably looking at not much cash flow coming every month.
Right.
Because it's the equity right at the end. You've bought it for this price, you're going to sell it for this price. That's where you're making your money. It's done in about a year's time.
Okay.
The other type of units that we go in for, we usually hold on to them for 3 to 5 years.
Okay.
And that's where you're getting your positive cash flow every 3 months.
3 months, okay.
But it's every month that we get the checks in. And then when we start looking at the market and we say, this market's about to change, we go in and we sell it.
Okay.
A lot of investors don't like to do that, but we explain to them, look, you've had positive cash flow for the last 3 years. That cash flow, if you hold on to that property for too long, the rents are going to start going down.
Right, right.
And let's sell now. We sell for a profit. We take the equity. You can have that back in your own pocket, or of course you can put it into a 1031 exchange and you can buy more properties.
Okay. Well, any final words for us in regards to real estate investing?
Probably find a mentor, somebody who knows what they're doing, knows the real estate cycle, and pick their brains.
Okay.
And
you could be our real estate mentor,
right? Yeah,
right?
I mean, I actually give seminars I'm just about to start them in the DC area as well on the cycle and how it all works and things like that.
Okay. I want to thank you so much, Bob,
welcome,
for being here with us today at the Profit Partner. And if you would like Bob to be your mentor or more information, you can reach him at rpinvestments.us. That's www.rpinvestments.us. Thank you so much, Bob, for being our special guest today. And again, my name is Cherie Warwick of the Profit Partner, where we help you grow 6-figure businesses in 12 months or less. God bless you. Have a prosperous day.